All the content contained in this webcast is for informational purposes only. The investments and strategies contained in this webcast may not be suitable for you. Please consult your own independent financial advisor before making any trading or investment decisions. Good morning, traders and investors around the world, and welcome to Wednesday's edition of PreMarketInfo.com, where we prepare you for the most important hour of the day, the first hour. Well, Dennis, it looks like there was a slew of good earnings last night, but the market is down.
Yeah, IBM, it looked like they were pretty decent numbers, but the stock has sold off pretty significantly. Sold off last night, trading in the same area today. This 202.65 is where it's trading at, but this is the area we've been highlighting as support for quite some time here, Joel, so it's going to be interesting. We got those five lows that you had pointed out here, 202.17, 202.64, 202. 80, so call this whole area of 202 major support for IBM. And you know, when stocks open up into major support like that, it's a nice setup. Obviously below 202 I would probably want to get out of my long, but if you're looking at, you know, a lower risk play, if you're willing to risk a buck on a stock like IBM, you could try to buy the open here and hope it pops back quick, and then if it cuts under 202, you know, and you're going to have to be pretty quick because there's going to be some high frequency traders trading this. It's going to be a little bit of a quicker stock, but if it cut under 202 I would probably get out, but if it can hold the 202 handle, maybe it can bounce. Joel, what do you think?
Yeah, pretty paltry volume here in this, Dennis. 15,000 shares is what I have in the pre-market. We did hit 202 exactly, Dennis.
Okay.
Right, yeah, right on the nose. So, Dennis, this is such a hard stock to trade. And then if you're going to try and trade it on earnings, you know, good luck to you. I mean, I did my numbers last night. It closed way up there, and I'm like, okay, you know, how far should I go down? And went down to 201.61, I believe, if we look at the numbers. That was a low from March 13th. So even if you cut through that 202 level, you can run in support there. I'd have to go with your psychological 200, Dennis. You know, the old psychological 200 level, probably get some bids there. And I would look for real good resistance at 204.15. That was Tuesday's low. Another stock with earnings, Dennis, I guess you can, even though they beat, they're calling it a disappointment, Intel.
Yeah, Intel, Joel. I mean, this stock has been on a heck of a run. Made a new 52-week high there yesterday. Came out with earnings, I think, you know, just had such a run up into the earnings that they really were going to have to knock the ball out of the park if it was going to continue to make a run at the $30 level. So it is selling off here this morning. It's off 80 cents here. We had the low there in April. The low from April is 27.41. We're trading 27.63 right now. So keep an eye on that low. I don't know if it'll bounce there. $27 area. We had a lot of consolidation in the whole month of February between 26.50 and 27. So I think that whole area will provide major support. So maybe some initial support at that April low, and then more major support starting around 27. What are you thinking on Intel?
27.55 has been the low in the pre-market, Dennis. So we're going to have to keep an eye on that 27.41 as well as that April 10th low. I think it's good support there. I mean, this is already a good down move for the stock. So probably have exceeded its average daily range in the pre-market. I think you'll run into some buyers there at that 27.50. If in fact that doesn't hold, Dennis, we could be testing the $27 level. That's where we kind of broke out from at the end of March. So use the 27.50, and then I'll go with the Dennis. I'm all over your even numbers today.
I like my whole number theory today,
I
Joel.
do. I know, even though I don't see a lot there at 27. I mean, it did break out from there. I just think, Dennis, that people are going to be using this opportunity to cover some shorts.
Yahoo reported too last night, Joel. Stock, obviously, that we don't cover that much, but the stock is getting a lift in the pre-market. We talked about this trend yesterday, this downtrend. It looks like that might be broken today, but it's going to come right into this whole resistance area. You had multiple highs here, Joel, in mid-March back at 1561, 1561, 1559, 1556, 1550. Call this whole area 1550 to 1560 major resistance. And where is it trading in the pre-market? 1548. So, you know, the charts do mean something. Anybody that says technicals don't mean anything. When you see where these stocks open and where they often go right to, you know, where they had trouble before. And this whole 1550 1550 to 1560 area is where the stock was struggling. So it wouldn't surprise me if it opens around there, maybe struggles a bit. If that can hold, you could try a low risk short. If it started taking those levels out, then stock might be in breakout mode.
Hit 1570 in the pre-market, Dennis.
Did hit 1570, so hit a little bit higher. But really consolidating here, Joel, now. I've been watching it here for the last 10-15 minutes. It's been just trading around this 1547, 1548 area.
Also 1610, if in fact we can bust through that 1570 level. 1610 was a high back on February 14th when it had a just monstrous down day. From the little I read about this, Dennis, a lot of this profit is attributed to cost cutting. Not so much of making improving the site or getting more ad traffic or whatever. They're doing it by reducing costs, and I think you've seen over the course of time that you can only redo your costs so long that you have to add to your core cash flow, and doesn't look like they've done it. It looks like this increase is by reducing costs.
Yeah, obviously, you always like to see earnings growth, as your major driver, for better earnings, not, reducing. You like to see top line growth as opposed to reducing, the middle stuff to try to make the bottom line look better. So I agree with that analysis there too, Joel. It's just not a stock that I would want in my portfolio long term, but for a trade, it's obviously getting a lift here today. That's why, I highlight some areas where if you wanted to try a short and you're hoping it's going to give it back, that might be an area, that 1550 to 1560 area. It's all risk return again, so you should always, whenever you make a trade, know where your out is. Have a price in mind that if it goes to here, I'm going to get out. And that's how you stay in the game. Because if you just enter a trade blind and say, oh, I'll see what happens, that's a recipe for disaster. You need to know where your out is. And that's why these support resistance numbers can come in so handy, because they highlight different areas where you can, get out or put on a lower risk trade.
One other highlight, Dennis. This is traded 750,000 shares, so
big volume. Yeah, that is big volume there, Joel. Other stocks reporting here this morning. Abbott Labs reporting this morning, Joel. This stock here, not one we cover a ton, but it can be a good mover sometimes. Usually it's on some drug-related stuff or whatever. But today on earnings, 61.20 it's trading right now after closing 60.43, so it is getting a good lift. This whole 61.50 area, I don't see any size there right now, but there was some size there before, so I'm not sure if that whole area is going to hold or not. But there was some institutional selling pressure in that 61.50 area, which means those high-frequency guys will probably be selling early in the 61.40s. If it opens up over that 61.50, I guess you could eyeball the high at 62.57 or the whole numbers theory at 62. But I think initial resistance at 61.50 on this one, Joel.
You know what's really interesting about this stock, Dennis, just looking at it at a longer-term perspective? This is one of the drug stocks that's recovered.
It has. Yeah.
And I was looking at Merck and Pfizer and some of these other stocks, and I'm not talking about recovering from 2008 levels. I'm talking about the meltdown in 2001, 2002 that we had in the market, and this is one stock that's really come back. So I don't want to bet against it, but shorter term, I would look. We traded above the $61 level. It looks like that 62.57 that we had the all-time high was just a spike, Dennis. I'm not sure what happened on that day, but I think you'll be sellers all the way up to that level if, in fact, we can get there. Spotty value, less than 6,000 shares have traded in the pre-market. 61.50 has been the high. That's the level that we talked about, the 61.49 high on April 5th. So you have a good point of reference there, 61.50. That's a good swing number in Abbott Labs.
Halliburton reported earnings here this morning too, Joel. HAL, the symbol on that one. Stock is getting a little bit of a lift. 32.66 is where it closed. It's trading 33.35 right now. So the stock is getting close. There was a couple highs. We had spotty highs there a week ago, 33.27. 33.14, a little bit above there. I think if it starts to, the only problem, I see a lot of resistance, different highs all over the place in the higher 33s, so I almost wonder if it just, maybe it can slowly start to nibble through that stuff and get to the 34 area, but I think it could be a little bit of a struggle as this thing climbs. What do you think, Joel? 33.50
is where we've topped out in the pre-market, just below that level. You're right, Dennis. These lows are all over the place. Or these highs are all over the place. It's really hard to pick a different level. If it really gets going, really gets into gear, 33.66 to 33.78. Those that double top back in early April. Looking at the pre-market, 32.80. It was bounced off there one time. There's just not a lot of interest in this stock, Dennis. These drillers are just haven't been able to get off the mat, even with the recent rally.
We do have some reporting here after the bell today, too. We're not going to have time to cover all the earnings. We are in earnings season, so we just don't have time on a 20-minute show. But I want to highlight a couple that are going to report tonight. American Express, which is AXP, due to report after the bell here. This is a stock that's got some pretty nice levels, institutional selling pressure at 59. We've had a couple highs up there above that at 59.26, but I do see some significant size at 59, and I see some enormous size at 60. So if for whatever reason, this thing goes into rally mode, 59 I think is going to be your first area of resistance, and $60. So if this thing reports after the bell really starts getting a lift, I think you'll see all kinds of high frequency resistance in the high 59s.
Yeah, 59.18, 59.26. We're a ways away from there. Really, it's been a nice lid on this stock, Dennis, under the 58.50 level. Basically, except for that one low when we dropped to 56.14, this thing has really been holding like a 57.20 to 58.50 range ahead of earnings. So I'd wait to play, a breakout above or below those levels.
Yeah, it's really consolidating there, Joel, and that's a good point. So it's probably going to make a move one way or another. Wait to see what the report is, probably the best way. But sometimes you get these pre-earnings run-ups too, so you just want to be aware that sometimes people get excited going into the reports. So
like the pre-earnings run-up into Google.
Well, the pre-earnings run-up. What about the pre-earnings run-up in the IBM yesterday too, Joel? That thing was up $5 yesterday, and obviously disappointed somewhat. And speaking of IBM, it actually is coming back a little bit, 203.85. I just brought it back up there. But eBay too, Joel. eBay reports after the bell. There's a stock that has actually held up not bad considering some of these other tech stocks have sold off significantly. It's high on the move, obviously up there at 38.09 or 38.18. It's 36.08 right now. Hasn't traded anything today, but again, you want to be aware that it does have earnings after the bell. This thing can be a mover. I know on some earnings reports it can move $2 or $3, so wouldn't surprise me, if it does move, in either direction. Obviously, we've got some spotty lows there, just above the 35 area, 35.50 to 35.35. We got about four spotty lows in that area, and then above that, we had some support there at 37 before, which, if you go with the whole number theory, maybe that provides some initial resistance.
It's been in basically a 35.30 to 36.70 range now, Dennis, for quite some time here. A little position squaring ahead of earnings. If it breaks down below this 35.30 level, little stopping point here at 35, but this thing could be in a whole host of trouble. On the other hand, if we can break above this 36.70 level, you probably will run into some size there at 37. But this thing's just winding up, Dennis, waiting for a move off the earnings.
Other stocks we've got in the news, Apple once again. I mean, let's talk about Apple. This was the craziest day I think we've seen in Apple quite yet. You had a nice blog there early in the morning calling that it was a flush out. You called it pretty early. I think on the show the stock was around 589, and you were saying, well, that's the flush out, and this thing's going to keep rallying. And you were exactly right on that, so I'll give you props on that one, Joel. The stock obviously had this huge flush out where we were saying those GMFO orders, which on our blog there basically had all the GMFO orders coming in there, selling it off, and then we've just went straight up ever since then. So, and this morning we've got Goldman now basically coming out and saying that they like the stock, they think you should buy it ahead of earnings, they think it's going to be a good report. That's giving the stock another $5 lift in the pre-market, 614.30. This stock is off to the races. If anybody got short this thing on the way up, they haven't had an out. The stock really hasn't pulled back anything more than a couple of bucks after running straight up basically 40 points yesterday from the low and continuing today. So there's some shorts underwater here, I'd imagine, Joel.
Yeah, and I'm sure that some people, when it took out that 578 level, we've been preaching, put the gas on it and went short, saying, "Oh man, I got to catch the run to 550." And I to a few of our subscribers that I do some custom level analysis for. I said, if it takes out that 578, it's fine. It goes under there. But if it comes back above that level, you really either have to cover short if you're brave enough to go long, because that was a really key level. Goldman saying buying ahead at earnings. I can't say that I disagree. I mean, I think they're still living off the iPad sales. Got to be good. All the reports have been good. So that's looking at it fundamentally. Looking at the resistance, Friday's high was 624.70. We're $10 away from there. That's the only real resistance point. Coming back down to 610, I'll call that support. That was yesterday's high, and the close was right there. So call the range 610 to 624. You get a break below 610. There's really nothing back under until I got a key number here at 597.20.
Wild, wild, wild stock. That's just a crazy chart. I can't believe that thing. I can't believe that range yesterday on that thing. But that's what can happen when you get everybody on one side of the trade, and everybody wanted to get out, and they're on the wrong side, and the thing goes the other way. So funny, funny, funny stuff. CREE all over the news here today. The stock is breaking down here. Some people are saying you should buy it at these levels, though. I've got coming up Cantor saying it's a buying opportunity. Maxime said it's a buying opportunity. A couple of analysts on this sell-off here for CREE, Joel. I'm looking at the chart here on this one. The stock obviously bottomed out yesterday in this 30 area. I'm going to go a little bit further back. Looking, this whole 30 area has been decent support. What do you got for a range on that thing, though? That thing was lower earlier, was it not?
Yeah, I mean, the crazy panic low, it must have been right when the news came out, was 28.10.
Oh, wow.
Yeah, and then you got some bounces at the $29 area. Dennis, I just don't like the way this chart looks.
This is a hard one to really tell, too. Like, you get up here, and obviously there's major resistance. You can isolate that up in the 32 area where we've had multiple highs. But, man, you start breaking down. I guess, it got to the lower end of the range in the pre-market where that's body low is 28.40. So you'd say it's kind of in the middle of the range now. So I don't know, man. I think I just sit on my hands on this one. This one's a hard one to predict.
Yeah, I mean, if it comes down, I mean, looking at the chart, the 2-day low is 30. You can buy it there, but it breaks through 30. You really don't have a lot of cover until basically the 29.10 level. And then look at these tops up here, Dennis. These 4 tops around the 32.70, 32.75 level. I think that's going to stand as a high in the stock for quite a while. So buyer beware in the CRE. Just to finish up the show, Dennis, we didn't talk much about the S&Ps. Really was going to be a strong close, as predicted by some analysts on CNBC. Got up there, hit Friday's high, stopped it smack in its tracks, and then we pulled back after some of the earnings were released. We'll see if the stock can get above settlement today, Dennis. 1383.50 with the close. That kind of coincides with our mid-range. I think it's going to get thick from 38.30 from this 83.50 up to the Globex high at 86.75, and we've been kind of in this 1360 to 1385, 89 range. So we'll see what happens for the rest of the week with the earnings being released. Any closing comments for our subscribers?
I think this is just a day that you've got obviously a couple major tech bellwethers there that are down on the day, but I think overall with Apple getting driven higher here and now, we have, we've been down most of the pre-market, but we're starting to get close to flat, only being down a couple of bucks. So it wouldn't surprise me if you get this little bit of follow-through from yesterday's move, and some of these stocks that are actually not looking that great here early on start to turn around. So just a word of caution to the shorts, that's what I'll say.
Okay. All right. We'll be back with our 10:30 update.